Good morning, I'm Chris Beach and welcome to Charting the Markets on IG Live. And we start today waiting for the resumption of US earnings season after Monday's hiatus. Reporting season really kicked off last week with JP Morgan and other banks taking their position at the head of the column. You also had actually Delta Airlines reporting earnings as well. And then Monday was a bit of a day off with no major reports, but it gets back into action today with Goldman Sachs, Morgan Stanley and a number of other companies, and it really doesn't stop from there. So things do get busier from today onwards. Overnight we had further signs of perhaps of weakness in the Chinese economy, also further hope that maybe there's some form of stimulus coming through there, but not enough really to lift the mood in Asian markets overnight. Really more losses, particularly for the Hang Seng, and the Nikkei struggling to rally. Also, RBA minutes, Reserve Bank of Australia commenting really that they did see a reason why they should pause rate hikes for now, although as ever with central banks, they left the door open to do more if necessary. I think everyone's still on inflation watch, so a bit of a muted reaction there in currencies too. So the rest of the day really dominated by those US earnings, particularly watching the likes of financial sector, obviously the Dow particularly, because today is going to be a day, I think, where the Dow is more in focus because of the heavier weighting of financials in that index compared to, of course, the S&P and goes without saying the Nasdaq 100, both of which have been stronger over the past few weeks. But we are seeing maybe signs of a tentative recovery in risk indices, certainly trying to make some headway, as we'll come to in a minute, after what's been quite a choppy period. They have rebounded from their lows, but there's still a lot of caution around in markets at this point in time. And otherwise, also looking at focus on the US dollar, particularly ahead of UK CPI tomorrow morning, with the pound at a 15-month high against the US dollar, and speculators really piling into that at the moment. A lot of people buying the pound, according to commitment of trader data, and that's showing perhaps signs of overextension in the short term. But starting with indices, beginning with the FTSE 100, currently trading down at 74.20, doing its best to try and recover after what has been a very bruising time for the index. European markets generally, it has to be said, have not had a good few months overall, struggling to regain a lot of lost ground. And as you can see, certainly for the FTSE 100, and here the China story comes into play, obviously, there's certainly quite a bit of weakness coming through. Well, we have seen it bounce from the 72.20, 72.30 area, and that's particularly interesting because it was the zone of support in March as well when we had the banking crisis. So there's a sign there of buyers willing to step in. It has recovered, but currently I think the interesting point for this index is going to be the battle around 74.40 or so in this zone of 30 points either side of that level, because that was where we saw some attempt to arrest the decline and dip buyers coming into action in May and indeed in June as well, with signs of a rebound, both of which then stalled and we saw it fall to new lows. But if we can get back above that, that might be a good first step for the buyers to put a marker down and say, actually, they decided to defend this one, and you might then get a bit more of an upside towards trendline resistance from that April high. That's the first one to watch, really. You can see it intersected a number of times since then, holding back further progress to the upside. When we've reached that line, then pulls back again. So it's a bit more work to be done for starters for the index, and also notable that you have had the 50-day moving average crossing below the 200-day in the fabled death cross as well. Although notably, of course, if you'd sold it around the time of the death cross, it hasn't really moved particularly, but certainly it would already at a rather elevated level to the downside. So unsurprisingly, perhaps a bit of a rebound. Normally, you could argue perhaps the death cross isn't a sign that you should just short it without reason, but it is perhaps an argument that you should be looking more to sell the rallies rather than buy the dip. So that's one to watch, particularly if the index can't get back above trendline resistance and can't really hold above 7,500. So something to watch there for the index. A lot of work to be done before we can really say that I think the buyers are back in control in the medium to long term here. Certainly for the moment, the sellers in control of the medium term, and the buyers have just managed to occasion a rebound over the past week or so that leaves the overall downward move from April still intact. Moving to the DAX, a better performance here, of course, and we're back above 16,000. We rebounded, as you can see, over the past week, back above 15,700, that key area that was so important since March. But not much sign of a real desire to move to the upside, but definitely one to watch as we do head back in the direction of this 16,155 area that was the high from the beginning of July, and we saw some sellers coming in at the end of last week after that 5-day rebound for the DAX. Very healthy performance there for the index, which essentially leaves us more or less in consolidation mode, as has been the case since April. Really, dip buyers here will have had to deal with a lot of frustration, I think, because just every time you think it's going to really move to the upside, it then drops back again. And indeed, of course, you've had a drop back below the 100-day moving average. So still really long consolidation, which is not, I think, unsurprising given the size of the move from September. If you get that move in context, you can see that I think you'd still call that an uptrend, really. It's just that the price hasn't been able to make a new higher high. So that's one voice against arguing that we've got further gains. But certainly, as we saw, the buyers defending 15,500. So that's your line in the sand there. If we go back below that, we'd have to maybe start to revise our view. But unlike the FTSE 100, where you've got that 50-day crossing below the 200-day, here, moving averages are still in the kind of order you'd want to see in an uptrend, i.e. you've got the 50-day and then the 100-day and the 200-day all either flat or rising. So the 200-day is still rising. So I think it's more to the uptrend here, certainly from the FTSE 100, which looks a much less optimistic outlook for that index. And we'll just wait and see whether the DAX has got the ability to push on back towards these highs around 16,300 from June, which of course is a record high, has to be said. So we're only 300 points away from 300 or 400 points away from that record high, or a new one certainly. So it does, I think, lean more to uptrend than downtrend at this point in time, even if it's more of a consolidation since April. And then to the Dow, which, as I say, is really the one to watch, because it's finally woken up to an extent after quite a tough year so far. And this is down, of course, to the weighting of the index, if we can get a bit technical for a second, because obviously you've got the NASDAQ 100, which is tech stocks, essentially the big 7 plus 93 others that no one really bothers about that much, to be fair. So that will, because they've had such big gains, that's what's driven the NASDAQ to their highest level in over a year. Similar for the S&P, quite a big weighting for tech in that index. But for the Dow, the weighting of tech stocks is not as strong because it's a price weighted index rather than a market cap weighted index, just to explain the difference. Which means that the gains have not been as solid. So the Dow has lagged behind in terms of performance. But with financials reporting better numbers so far, if you look back at JP Morgan and Wells Fargo on Friday, there was a fairly solid set of numbers there and some optimism about the US economy. And with Goldman Sachs today, if they can produce good numbers, maybe that will help this index to make up a bit more lost ground. But as you can see, we are just essentially where we were at the beginning of December last year, 34,565. And we're back here again, just above that, really. So you could argue, okay, the index has gone nowhere if you want to be that strict. It has, though, seen quite a bit of a dip and then a recovery. And you have had at least an uptrend still intact here from end of October. It's just that we haven't seen much upside progress. It's a bit like the DAX, although, of course, we're well off the record highs for the Dow. But if we can move on above, say, 34,600, a daily close really above 565, then it takes us on to that December peak just below 35,000, and then that would clear the way and make us much more optimistic about a move perhaps towards those April highs from last year, 35,400, and then the early February high, 35,860. Buyers still in charge on this one, as you can see, and if nothing else, you've had those dips to the 50-day moving average twice in the past month or so that have brought out the buyers. So very solid performance there for the Dow as well. But of course, it will be volatile around those earnings, so do watch out for that later today. So looking at to the FX markets, euro dollar sitting quite happily at just below its highest level in over a year for this. Sorry, going back to its highest level since February of last year. Still a very impressive recovery. This, as we'll see for euro dollar and for cable in a second, is all about the differential between what the Fed is going to do and the other central banks. And for the ECB and the BOE, there's still more rate hikes we expect. So that's driven, I think, this continued rally in euro dollar more than anything else. As you can see, we've really had that impressive breakout to the upside after edging downwards in June. Then it's sprung high, really, just as if it's, as I like to say, it's like holding a ball underwater. We let it go and off it goes. We've seen it back to, we saw it go back to the April and May highs and then on to there to its highest level in coming up on 18 months now, really. Now, the question is, of course, where does it go from here? The next big levels to watch become really almost 114.60 levels that we saw right at the beginning of 2022. So that's a key one to look for. That's quite overextended, so it is worth bearing in mind. But it's still very much a case of buying on weakness here. if you're already long. If you're not already long euro-dollar, it's a bit more of a problem because you've seen it move 400 points or so in the space of a week or a bit. So maybe some more consolidation, but waiting for that to arrive. Maybe if it pulls back to 111, that might give you an entry point, certainly, because if we hold above that, those previous highs from April and May, that remains a fairly bullish outlook. Might just see some short-term consolidation, but certainly the uptrend here firmly back in action and a new higher high in place. So the buyers definitively in charge there. Same thing for the pound, actually. Another strong rally, and just look how far we've come from those September lows. If you cast your mind back when people were predicting parity against the pound, whenever someone predicts parity for euro dollar or cable, it's probably a sign that the fall is done, and that's exactly what we've got. Steady uptrend, another big move over the past few days. So if you're already along the pound and sort of stuck with it all the way through May and June, then well done. It's a question now of where it goes from here, because it looks overextended to the human eye. The market doesn't always oblige us with a nice pullback because it's driven by other factors. There could be the potential that we go back towards 128, maybe in the short term, but that might take a while to materialize. Maybe we get some more upside in the short term. Looking back, though, of course, we're sitting at the highest level here since April of last year. The next big one to watch is that March high up at 133. And then from there, we start to really recover ground. But it's very impressive performance. It's just a case of waiting for the dip that might take some time to arrive on the daily chart, depending on your time frame, of course. If we did look at the hourly chart just to get a sort of short-term view, it has pulled back from that high, and it shows at the moment it seems to show a desire to hold above 130.50, so that might see some buying pressure develop in this uptrend reignite. So that's the one thing to watch for, perhaps. And then looking at dollar yen briefly, this is the one that's taken a huge knock. If we're looking for pullbacks, this is exactly what you want to see. And the problem with markets is you see this pullback and then immediately, human nature being what it is, you think, oh my goodness, it's going to keep falling. But at the moment it has paused, and the drop from 145 down towards 130 will, I think, have satisfied the Japanese Ministry of Finance for the moment, which is talking about intervention at the beginning of the month when it was up at this high level, and now it's back down again. They're probably content to see what happens next. It looks like the buyers are trying to regain control, but yesterday's attempt to rally above 140, 139.40 really ran out of steam. So we're still consolidating. I suppose you can say it stopped going down for the beginning of July. It just hasn't started going back up again in very simplistic terms. And that's perhaps the key thing to watch. Back above 139.40 would perhaps give us more encouragement that a higher low has been formed if we get back above that. Otherwise, if it does go back below the 200-day, then that's quite a big change in tone, something to watch for perhaps. But it does look like pullback has done its job for the time being, and it might now see a resumption of the move higher. Finally, commodity markets. The weaker dollar giving gold a bit of a lift this morning. Really, that's doing its best to recover after a mixed couple of days, really. If you look, gold rallied to the 50-day moving average last week, last Wednesday, and then a tiny bit of a pullback, and then it's starting to recover once again. So it looks like there's some more room to the upside. Unlike, say, the pound and the euro, it doesn't look overstretched after its recent recovery. Perhaps more to go. The MACD is still relatively low down in terms of its reading. It's not up at the levels it was back in April. So you might see perhaps a bit more of a recovery, which in that case leads us on to target 1980. 2000, always the crucial psychological level. Markets do love round numbers. Investors do love round numbers. So something to watch for, and then on towards this 2060 level. But it looks like the pullback, which has been going on since May, finally has run its course, and plenty of false dawns since then. But a desire to move on back above the 50-day moving average, that's quite a strong sign as well, really. So one thing to watch on that front. And then looking at the crude oil, this one is very hard to tell at the minute, because I think you've had this big bounce from the end of June, took us back to the 200-day moving average. Of course, look at what happened to the last one. It then disappeared into nothingness in the end, and we saw a move back to the downside. After 2 sharp days of losses on Friday and then indeed in Monday as well, buyers trying to support this one. So at least perhaps if you saw a stochastic recovery in the short term back up and the price back above 75, it might give you a bit more of a lift to target the 200-day moving average again. Otherwise, really, I think 74 is your line in the sand. Back below that, back below the 100-day moving average would incline us to the view that maybe we're back in the downtrend, and another move back towards 67 would be the result. But certainly crude oil has been a frustrating one I think, for buyers and sellers, because every time you think it's going to really move to the downside, it then stops. And last time we had a big rally, it then fizzled out once again. So we're watching this one quite closely. Very much oscillating around hopes and fears around recession. If you think a recession is coming still next year, then that would imply that oil prices continue to fall, something to watch for, really. But I think if we get back above the 200-day moving average, clearly that will build a more medium-term bullish view, or at least begin to build that over the next few weeks. So looking to the rest of the day, it's earnings season back on again. Goldman Sachs, Morgan Stanley on the docket for today, and others from there, really. It gets busier and broader in terms of the sectors covered. Tesla, Netflix also on the calendar for the week. So do expect that to affect US indices. Those earnings should come out today around about 12 midday or about 12:15. So do watch out for those. Otherwise, we'll be back with Beat the Street, the new US show at 1:30 live on IG, and Charting will be back as normal at 10:30 tomorrow.